Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for another sell-side day in the equity market here on the 20th of October 2022. Let's start there. The bond market is going to be the focus of tonight's video, but before we get to the bond market, which had another big down day, at least in the TLT, so did the ZN. ZN is a 10-year Treasury note, and ZB is the 30-year Treasury bond. But before we get there, the equity market itself was down another 1% in today's session. Outside of that, the crude, or CL, oil, did have a bounce, did have a rally, and that's up away from the 77 and 75 per barrel, and is turning back down from just about that 92 per barrel level. Gold was flat in today's session, but again, let's start with the bond market. And TLT, being a tradable ETF, is going to be similar to IEF, IEF being a little bit closer, 7 to 10 year Treasury bond. And of course the TLT would be a little longer dated, roughly the 20-year bond. Let's start with that TLT. Now it is making new lows for 2022. But that's the logic of this inflationary cycle where bonds continue the downtrend. And that downtrend is a series of lower lows and lower highs, falling moving averages, and falling linear regression. In fact, let's start there. Let's take everything else off the chart and put in some linear regression, just to note trend and potential spots of purchase, buying, or risk, and the like. So these linear regression lines continue to trade lower. And the bond market, again, TLT, is under that 95 per share level. Same is going to be true in IEF. IEF is right there at new lows for 2022, and that's the logic within the context of what is weak gets weaker, but what is strong gets stronger. And inflation is continuing to be the big talk of the town, and that's the big talk of 2022, which means this is a very big picture type of logic, big fundamental, or big larger picture type assessment. And that just frames out short-term trades in the direction of that narrative. And if inflation is a concern, the second order is going to be the bond prices, but the first continues to be higher interest rates. So a quick note, if inflation is the big concern, of course that's CPI and the producer price index and just general inflationary numbers, which continue to print high. If inflation is concerned, the Fed, to combat that inflation or try to pull the inflation down, is going to raise interest rates. That's been the theme for the most of 2022. And if the Fed raises rates, rates go up. And we've seen this in multiple different Treasury products. This is the TNX. TNX is going to be the 10-year Treasury note yield. And the way that Thinkorswim and other products, other software brokers are going to report that TNX, it's going to come in 40 and 30 and 20. Not long ago, 10. And just take a little decimal point, that's 1% for the 10-year Treasury yield, 2%, 3%, and now let's do this together. Let's put a 4% level into our charts. And that's where we are, breaking above it and likely continuing higher. Now that is what is going to push and pull and drag the bond market lower. We see that again in TLT, ZN, and other related products, even in the lower frame or lower yield or lower time horizon of the bond market. That's the 1 year and 2 and others. But again, this is the concern as we continue pushing new lows in the bond market. Yields trade higher, inflation continues to be the concern. When will this turn around? When inflation stops going up. And until that happens, these trends and additional lows yet to come will probably play out. But again, outside of these products, the yield continues higher, and right behind it, and of course going into currency markets across the board, we look at the DXY, the dollar index here in Thinkorswim, and that continues its upward drift and upward trend as well. And we can put those same linear regression lines of that 150 to see that this has a rising linear regression, and not to be outdone, so does the yield market. These are things that continue to be big picture narratives that affect all of the markets, mainly into the bonds. Now, pulling back to the stock market, to a lesser extent, inflation has a double whammy, or at least the Fed's response to it. So as inflation continues to be a problem, that is going to put pressure on consumers, how they spend their dollars. Of course, companies, corporations, their earnings and their profits go down. And behind that is the higher, very rapid rise in interest rate. And the policy takes it all the way down. And that is what I would call a double whammy to the equity market, which has been in a downtrend. And we even say bear market or recession, at least in terms of the price chart, bear market and downtrend through the bulk of 2022, with the Nasdaq taking the biggest hit or the brunt of those sell-side activities. Now that is the big picture. And today's video does focus mostly on the bond market and the sell-off and the continued concern about inflation and how the Fed is responding to it and how the economy is responding as well. But let's turn back to the Tuesday video where we're talking about some earnings. And as we go in the mid portion of the video, a few stocks, key stocks, had earnings, and they have had earnings this week. So just looking at the stocks that had earnings in today's session, and you see a big disparity. UNP, we'll go through all these in a moment, UNP was down about 7% in today's session by the close. And over on the other side, DHR, Danaher was also down just about 6% in today's session. And one other is going to be an up move. That's AT&T. AT&T was up about 7% in the close of today's session. But there's one stock we want to look at, and that would be just recently Tesla. And Tesla's earnings took it down in today's session. That was yesterday's earnings and after the close. So Tesla itself, you don't see it here, but it was down 6%, almost 7% in the earnings aftermath. Of course, we saw Netflix go the other direction. Netflix was a bullish candidate. And remember in Tuesday's video, the video ended with the stock at $270 per share. That was right there at that expected move. And that stock held the gain and increased, built on it in the next trading session. So where do the daily charts leave us? Get all these indicators off with these stocks. At least the ones that had earnings are having big moves in today's session here on Thursday. Union Pacific down 7% at new lows. We'll come back in a moment to talk about some of the leading stocks and big market cap names that had new 52-week lows. Union Pacific is going to be one of those, and that is one of our leaders or laggards, biggest stock that declined in today's session. But AT&T, not as much in a downtrend, did have a 7% gain. Behind that was Danaher. That's a little more in a trading range sideways, but it was a 6%, almost 6% decline in today's session. And other stocks behind it, Dow Chemical, not much of a change. Philip Morris, not much of a change there. And American Express and Verizon, they will report tomorrow. So Friday after the bell, or Friday morning, we'll have earnings from AXP, American Express, and Verizon. So those will be in focus. Back to the stocks which made 52-week lows. So these are the ones in our scan. And just to reference how to get the scan on your own charts, it would be the load scan query on the scan tab. And to me, it will be public, which is new yearly lows, and then run the scan in the S&P 500. You can customize this into any other index you would like here in the scan in. But which stocks made 52-week lows and why are they important? I always focus on the leaders, which is the big market cap. So I will focus attention and trades and potential positions within these stocks that rise at the top. And these are leaders. Tesla, again, back in focus with the pre or the post earnings from yesterday's session. Tesla snuck to a new low, but it does count as a new 52-week low in today's session. Behind it is Thermo Fisher Scientific, Abbott Laboratory, we just saw Union Pacific. Estee Lauder is a retail name, and the list goes on. Norfolk Southern, Exelon, and a few other financial companies, but these retail companies as well, CarMax and others, reach across the board of the sectors. So quickly, let's see some of these in motion. There's TMO, Thermo Fisher, and then Abbott Laboratories down at new 52-week lows as that trend continues with new price lows. Union Pacific, we just saw it. Estee Lauder being a retail company down at new lows. CCI, we just saw Norfolk Southern, Exelon, and a few others, which would include CarMax. But these weak stocks get weaker. Stocks that make 52-week lows are under distribution and selling pressure and have a little better odds to keep on their downtrend and lower prices ahead. So we'd stay away from these from the long side. Longs, if you wish to take some of those, ought to be in stocks that are having a little more relative strength or are potentially positive or up for the year. Not a lot of stocks fit that category, but of course some of them do. And to conclude, even some sectors fit the bill of strong sectors getting stronger, strong stocks getting stronger, and those can be some names for additional fine-tuning and scanning. But continue watching the bonds, even if you are a short-term trader. Having bonds push down to these lows and extend the lows is concerning and is an attention-grabbing type of thing to watch. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for October 20th, 2022.